0.5% at one point. It's, of course, given back bulk of those gains, just a percent and a half. Of course, yesterday it saw that 20% massive move. Jay Bala is with us of cashthechaos.com. Jay, good to have you here. Thanks for joining us. So will the 20-day go on the downside? What's your sense? You were a little more constructive the last we spoke, Jay.
Yeah, hi Prashant. Yeah, the market's short term has become a little bit, here and there. The fact that the markets haven't been able to follow through on the fresh record high tells that the markets are waiting for some sort of pullback before the actual move actually comes through. But the fact that the markets have registered fresh all-time high, that's a bullish sign. It might just, the big move that usually comes with the fresh record highs. That may get slightly delayed. The key level to watch out for is 25,840 on the Nifty. If 25,840 were to go through, I would expect the Nifty to go somewhere close to the August low of 24,400 and then launch a fresh attack on the all-time high. So, but the short point is that very short term is getting hazy. But there is no change in the outlook somewhere between March to May 2026. I'm expecting 29,000, which I continue to expect.
March 26. March 26, right?
March 2026. So that's about say 4 months away. So if the markets were to drop below 25,840, this scenario of markets going closer to the August low will come up. And then we are expecting fresh record highs to come in the calendar year 2026.
So first we go to the August low of 24,400 or first we go to 29,000?
Yeah, that's the thing. That's the reason why I've given 25,840. So until 25,840 is not broken, we can anticipate fresh record highs to come through now. Okay. But if 25,840 were to get broken, then the scenario that 24,400 is coming first and then further record highs to 29,000 is coming much later on. But if 25,840 were to hold and not break, we can still anticipate fresh record highs and the follow through for the break of 26,277, the September 2024 high, to come through now itself. So watch out for 25,840 is a very important level.
Okay, that's the line in sand. What are the stocks, Jay, that you're looking at where you are observing interesting patterns?
Yeah, we need to get much lower on our allocation because we are at crossroads. So with that in mind, take these two stocks. I have one. The first one is on the cement space, Ramco Cements. Ramco Cements is seeming to put in a double bottom around 960, 965. So it has upside potential in the short term about 1160. The second one is a continuing trade on Maruti. I've been bullish on the auto space since July. And I'm continuing to see Maruti scale fresh all-time highs. But again, you got to be a bit more measured in your approach here because it's run up quite a bit. And the auto sector also has done quite well. So allocate much lower. Long Maruti around 20 with a stop loss of 15,500 with an objective of 17,200 to 17,400.
Okay, so Maruti is a long. On financials, Jay, what are the trades? Because that's, I mean, most of the financials has been the best performing part of the market, right? Starting with Bajaj Finance itself. Would you look at this dip to buy anything where you still see momentum, or is it a time to start taking some profits on a trade that's worked very well over the last few months?
Yeah, looking at it from a medium term and a short term perspective, the fact that HDFC and ICICI are not participating, and HDFC Bank in particular looks like it might be causing a double top, that's raising a bit of concern. But from a sectoral perspective, as long as the banking sector stays above 57,629. From a medium term, the overall view for the banking sector and the financials remains bullish. So watch out 57,629 on the banking sector. The index resistance at about 61,000 and the supports are about 57,500 to 56,737.
Jay, stay with us. We're going to take a quick commercial.
On these large cap banks?
Yeah, it definitely is a cause of concern for the overall Nifty's trend and as well as for the banking sector. Axis Bank within the private banking space is doing pretty well, but ICICI Bank has been clocking lower lows and lower highs. That's not an encouraging sign. And the fact that HDFC Bank is struggling around 1,020 it has potential to be a double top, a triple top if we were to go below 940. So these are pivotals, and they need to reverse this negative potential. So far it's just a potential, and I would be more concerned if HDFC Bank were to drop below 920 more than ICICI. The markets have been managing to do reasonably well even with ICICI's weakness, but two heavyweights trending negatively will cause a little more negatives for the overall market. So these are key stocks, and the key level is 920 on HDFC.
Okay, so these three large banks, ICICI, Axis, HDFC Bank, exerting pressure. But outside of that, heavyweights like Reliance Industries, L&T, ITC, also weakening in trade. And these stocks are down approximately close to about 1%. Jay, Rupee, that's taking all the headlines, continues to hit newer lows. Do you want to tell us in your assessment where it's headed?
The long-term forecast for the Rupee in 2019 was for the Rupee to get to about 93. But the intervention that happened for the Rupee during the Governor Shaktikanta Das's time looked like it might have put a lid on it, but it looks like the original trend is in place. But from a long-term perspective, Rupee is on its final leg of weakness. It could top out or it could bottom out somewhere about 91 to 93. So watching it pretty closely. If it were to print 88.9 and then go back to fresh low, then that's a very good sign from a long-term perspective. So the long-term call is that once 93 or 91 to 93 is done, the Rupee is set to strengthen on a secular basis for about 5 to 7 years. But we still have fresh record lows likely to come through in the short term. So and it could also be for the next 3 to 6 months, maybe even a year. So it's the long term is looking encouraging, but we have possibly new lows coming in the short term.
You're actually saying that we'll see after these lows appreciation for a few years.
That's right. It could be as much as 77 to 72 to the dollar, but that's a 5 to 7 year forecast. But first, we need to not lose sight of the possibility that further lows somewhere about 91 to 93 is coming. Post that, that it's likely to be a secular strengthening move for the Rupee. Now we are looking, if you understand a bit of Elliott waves, we are talking about the fifth of a fifth for the Rupee from 1974.
I see. 91, 93 is already almost there, Jay. It's not very far away. So we'll see. What about the global scene, Jay? What's your sense on what's striking, if anything at all, to you?
Yeah, the US equity markets have possibly bottomed on the 21st of November or got one more low below the 21st of November. The broad point is that the market's movements from the October highs is a corrective decline, and sentiment for the US markets isn't supportive of a major decline from current levels. So if we have to see one more low below the 21st of November's low, and that will be a final low for the US equity markets. It's already bottomed here, and it's heading to if you take the broader S&P 500, it's possibly heading to 7,400 with or without a new low below the 21st of November low. But so basically, I still remain bullish on the US equity markets, same like the Indian markets.
Okay, so that's how things are shaping up for the currency, for the dollar. For the Nifty, by the way, as we start today's recap, Jay, thanks so much. Just, give us a couple of minutes. We'll, start wrapping up the day. For the